Countries around the world are getting rich, not by raising taxes or printing money, but by investing their wealth into the stock market. But there's one country missing from that list, the United States of America. But that might not last long because the Trump administration has been taking steps over the last number of months to create something we've never had before, a national wealth fund. The goal is to make good investments so we can make a lot of money, reinvest that money back into the country, and hopefully reset our $38 trillion worth of national debt. There's just one little problem. The United States government is not generating enough tax dollars to pay its bills, let alone start a sovereign wealth fund. And if the United States government makes a bad investment, you are going to be the one that's on the hook and has to pay the price. That being said, the people that understand how this works are going to be able to find opportunities to grow their wealth because there's going to be a lot of money moving. But the people that don't understand this are going to be blindsided, which is why I'm making this video for you today. That way you can understand how this can create investment opportunities for you. The United States now has a record $38 trillion worth of national debt. And the reason why we have so much national debt is because every year the United States government collects tax dollars from people like you, me, and other taxpayers. And then they take these tax dollars and they spend all that money. And then they realize they don't have enough money to keep paying all their bills. So then they go out and borrow more money every single year. This is called a national deficit. And then every single year they borrow money. They spend that money, and all that deficit every year gets added up into a big pool called our national debt. This is how we've accumulated $38 trillion worth of national debt. And the fastest growing expense for the United States government right now is not our infrastructure. It's not technology. It's not healthcare. It's not the military. It is interest payments on our national debt, which now we're actually paying more money in interest on our debt than we're paying to our entire military. Now, the reason why this matters is because when we have such a large amount of national debt, it can kind of push three different things to happen. Number one is it can increase taxes because, like I just said, the fastest growing expense for the United States government is our net interest payments, meaning the amount of money you have to pay in interest on all this debt that the United States government has accumulated. And the United States government only has one source of revenue. It's tax dollars from taxpayers. So if we continue to have higher expenses, the government is going to need more income. And where are they going to generate that income? By raising your taxes. Number two is by seeing a weaker dollar. And what that means is when we have this large amount of national debt, that means we've printed or borrowed a lot of money. And if we have to keep creating more money out of thin air, well, that means effectively that the value of each dollar continues to go down. We have seen the value of our dollar drop decade after decade after decade because of all the money printing that we've done, which is why groceries are so much more expensive today than they were 10 years ago and a whole lot more expensive than they were 50 years ago. It's because we've created so much money that the value of the dollar has dropped, causing the prices of things to go up. That's how inflation works. And number three is effectively higher interest rates. What that means is our interest rates that you pay for your mortgage or your credit card. They're dictated by two things. They're dictated by the interest rate set by the Federal Reserve Bank. This is called the federal funds rate. That ends up becoming the interest rate that banks pay to borrow money from one another. But it's also dictated by something called a treasury yield. And what a treasury yield is, it's the interest rate that the government pays when you, me, or an institution or a foreign government or anybody lends money to the United States government. Now, I want you to think about it like this. When you make a safe investment, the safer an investment, the lower the return you're going to get. The riskier the investment, the more return you're going to need in order to justify making that investment. I mean, if you're going to invest your money into your brokers and Bundy, you better hope that the potential is really high to justify making that investment, right? Well, if you are lending money to the United States government and they have this huge amount of debt, now you're getting concerned about them being able to pay that debt back. You're going to want a better rate of return to justify making that investment. And this is where bigger national debts can create more concerns about lending money to the United States government, which can effectively then raise interest rates. And if the government raises the interest rate that they have to pay, that means you're going to pay a higher interest rate on your mortgage. That means you're going to pay a higher interest rate on your car loan. That means you're going to pay a higher interest rate on your credit card debt, because this rate set by the government then influences every other interest rate in our entire economic system. So when you have high amounts of national debt, three things happen. You can see higher taxes, you see a weaker dollar, you see higher interest rates. This is why the national debt is a problem. Now, there are effectively three things that the United States government can do right now to help lower this national debt and have more money. Option number one is they can spend less money. If the United States government lived within their means, like every single person has to do, that would mean that the government doesn't keep racking up more national deficit. That means we have more ability to pay down this debt because we're not spending money we don't have. And that makes common sense, except the problem with that is if the government stops spending a lot of money, that means people are going to get laid off. That means departments are going to lose funding. That means businesses that rely on funding from the government are going to stop existing. And that creates problems for the economy because the largest spender in our economic system is none other than the United States government. And in our economy, the more money you spend, the more money somebody else makes. And well, if the government is the largest spender, we have a lot of people and a lot of businesses that have become so reliant on money from the government that if the government were to spend less money, it would put our economy into a recession. That's the downfall with spending less money. Option number two is the United States government can earn more money, which means they're going to have to raise your taxes. And again, that has a consequence too, because, well, nobody likes to pay more money in taxes. But then this is where the Trump administration is also looking at option number three, building creative ways to find extra money to potentially lower that debt. And for the purpose of this video, I'm going to be focusing on the Sovereign Wealth Fund. A sovereign wealth fund is where a government takes money and they are going to invest it into private companies. And their goal is to see two things. Number one is the government wants to make money. They want to see a return. And number two, their goal is to grow the economy. Because if the government is investing in other American companies and this American company can grow, hire more people, well, that will ultimately mean that people have more jobs and grow the economy. But if we focus in on the topic of the national debt, the whole idea that the United States government has is if we take money and we invest it into this company where the stock is trading for $100 a share, if we give it this big influx of cash, hopefully this company will take this money, hire more employees, invest in more growth, and then pretty soon this company is now going to be worth hypothetically $300 per share. Now, if this happens, that means every investor, including the United States government, including anybody else who would invest in this company, has now made a lot of money because your stock has now gone from $100 a share to $300 a share. And this is where the United States government says, well, we have a couple options if this is to happen. Number one is we could sell this investment for a profit. If we sell this investment for a profit, we now have a lot of cash that we could use to potentially pay down our national debt. Or instead of actually selling it, we can just keep owning this asset. And now maybe our debt doesn't look so bad because, well, let me give you an example. Is having $1 million worth of debt a lot or a little bit? The answer is it depends. If you are worth $1 billion, $1 million of debt is peanuts. But if you're worth 2 peanuts, $1 million of debt is a lot. And what the United States government is saying is the problem is not the $38 trillion of national debt that we have. The problem is our assets are not growing fast enough to keep up with the national debt. If our debt is growing faster than our assets, that's the problem. But if we can grow our assets faster, now the $38 trillion worth of debt doesn't seem like as big of a problem. Now, obviously, if the United States government starts to become an investor and they're participating in the stock market, that is going to benefit investors, which is why, again, it is so important for you to become financially educated to become an investor. And for those of you that are investors or want to become an investor, again, I have a free investing masterclass that I put together for you where I walk you through how you get started as an investor and find hidden investment opportunities before everybody else. I'll even give you the exact framework that my firm and I use to research investment opportunities before they hit the headlines. It's a completely free masterclass. And when you register for it, you're also going to get access to Market Briefs, which is my newsletter for investors, completely free as a bonus. So if you want to get the Investing Masterclass and Market Briefs all for free, all you have to do is register, and I have the link for you down in the description below. So now that you understand the backstory, let's talk about where we are now, and then we'll talk about how this can actually create a potential investment opportunity. In the beginning part of 2025, President Trump first announced that he wanted to create a sovereign wealth fund and that he directed the Secretary of Treasury and Commerce to come up with a plan within 90 days. Well, those 90 days have come and gone, and the White House has essentially said that we've made some progress, but we're still looking into it with no final plan on the sovereign wealth fund yet, which might make it seem like the United States government is not participating in this type of investing yet. But that's not exactly true either. We do not have a formal sovereign wealth fund yet, but the United States government is already doing what a sovereign wealth fund would do, which is investing in private companies on the stock market. Even Bloomberg recently published a piece about this titled, "It looks like the United States has a sovereign wealth fund." Now, what do I mean exactly? Well, the United States government has invested $9 billion into the Intel stock. The United States government has invested hundreds of millions of dollars into the MP Material stock. And the Treasury Secretary says that we might be investing more money into private companies very soon. So no, the United States government does not have a sovereign wealth fund yet. Maybe we will soon, but we're already investing in companies even though we don't have a sovereign wealth fund. And the reason why this matters for you as an investor is because if the government is going to pour huge sums of capital into a stock, what do you think is going to happen to the stock price? And the way that I want you to think about this is, imagine Warren Buffett goes out and he says, you know what, instead of me eating McDonald's and Coca-Cola, I'm going to start eating Chipotle because I love the extra guac. If Warren Buffett were to say that and he announces he's investing into Chipotle, what do you think is going to happen to the Chipotle stock? A bunch of other investors are going to cheer and they're going to start buying it too because they want to own what Warren Buffett owns. Well, do you want to know who's an even bigger investor and a more prominent investor and a more famous investor than Warren Buffett? Well, it's going to be the United States government because the United States government has even bigger pockets than Warren Buffett does. Now, of course, this still leaves the question of where is the United States government getting the money to actually invest in these companies? And right now, as of today, the money has been coming from previous congressional approval. There's been previous bills passed already signed by Congress, which has allocated money for specific things like infrastructure and chips and other things like that. And the United States government today is using that money to invest in private companies. Now, clearly you can see the upside if the United States government makes a good investment. Well, that makes the United States government wealthier. It makes our debt look not as bad. Or the United States government can sell off that investment and help pay off that debt. But what if the opposite happens? What if the United States government invests their money into a company and then the company declares bankruptcy? Now, obviously, if you're getting injections of cash from the United States government, it becomes more difficult to declare bankruptcy, but it's not impossible. We've seen it happen before. During the 2008 financial crisis, GM was on the verge of bankruptcy. So the United States government gave them billions of dollars and then they still ended up bankrupt, which meant the United States government ended up losing billions of tax dollars that they gave to General Motors. So if the United States government invests their money into Intel or MP Materials and these stocks go up in value, the United States government gets rich. If they go down in value or they go bankrupt, well, now the United States government is in a bigger problem because that means they lost their tax dollars. They lost that asset on the balance sheet, which makes the national debt look worse. That impacts our national security because if you remember, why does national debt matter? It can impact the interest rates that the United States government has to pay. It can create a weaker dollar, and that can impact now the value of our dollar, which hurts our national security. So now that you understand all that, how can this create an investment opportunity? And the first thing I want to say is, of course, investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always your own due diligence and never blindly trust a random guy on YouTube. And I don't recommend you chase an investment, but I want you to start thinking like an investor. You can invest in the same companies that the United States government is investing in. You can also pay attention to where the United States government is looking to invest money and what industries they're paying attention to. As of the time of me recording this video, there are 3 big industries that the United States government is really investing money into and wanting to help grow. Number 1 is artificial intelligence, because that's going to help us continue to be an economic leader in the world. Number 2 is chips, because these computer chips power pretty much our entire economy now, because everything is smart from your dishwasher to your car. And then number 3 are rare earth metals, critical metals, because the United States government wants to become more independent from China. Now, we've already seen the United States government invest in specific companies in this industry. But if you don't want to invest in those companies, you can look at ETFs. You can look at other companies and just understand that this is where the United States government is trying to push money and investment, at least under the Trump administration. Who knows what's going to happen after the Trump administration? But that's what's happening right now. We can also pay attention to where the Trump administration is pulling money away from. For example, producing all this AI, producing these rare earths, takes a lot of energy. And this is where the Trump administration is pushing energy usage through things like fossil fuels and oil, through things like nuclear, but they're pulling money away from things like green energy because they don't feel that the return is there. Does that mean you shouldn't invest in some industries? Maybe not. But I want you to understand now how the United States government can influence where money is flowing, because your goal as an investor is ultimately to invest where money is growing, because you want to see a return on your investment. Now, are there cons of the United States government investing in companies? Sure. If you are a company and you get a huge check from the United States government, it becomes a lot harder to compete against you. So investments from the government make it harder to have real free market competition. Investments from the government also mean that now politics become more important in the private market, because you as a company now may want to be a little bit more friendly to the government in order to secure funding from the United States government. So yeah, there are cons, because if you really want a free market, you don't want the government deciding who's going to be a winner or a loser. But this is the game that's happening right now. And your goal is to be a financially smarter investor. That way you can find the opportunities to build your wealth. So what we're seeing happen right now is that we have this $38 trillion worth of national debt. Is it a problem? Well, maybe. It's kind of becoming a problem, because it could mean higher taxes. It could mean a weaker dollar. It could mean higher interest rates. And this is where the United States government could spend less money. But that means we can end up in a recession. It means that the United States government can raise your taxes, but nobody wants to pay higher taxes. And this is where the United States government is trying to get creative. And one of the ways they're trying to get creative is by investing money into private companies. And this is where the Trump administration has proposed building a sovereign wealth fund, but they haven't actually built it yet. But even though we haven't built a sovereign wealth fund, we are still investing in private companies. We've seen billions of dollars from taxes go into the United States government that are now being invested into private companies that are trading on the stock market. This creates an investment opportunity for the financially savvy, because if you can follow where that money is going, that could help boost your investments. If you don't understand this, well, you could pay the price. You could pay the price through inflation. If the United States government makes a bad investment because now your tax dollars just got lost and wasted, it could mean, well, if asset prices are going up and you're not investing, you're effectively becoming poorer, because now your salary is not keeping up with assets. And this is why, number one, it's so important for you to become an investor. Again, I have my free investing masterclass for you down in the description if you need some help with that. But it's so important for you to build your financial